Good day. So we have had a great time with the market, but now we are experiencing, slow days. And also this is very normal. And one thing that I want to first of all talk about, with you is understanding how the market moves, all right? In the long run and also in the short run. We need to understand how this whole thing works. If you are a day trader, you are going to experience a lot of frustration right now as a trader. But if you are a swing trader, then you are going to enjoy because you have less time. Now, the question that we would ask you is, what type of a trader are you? What type of a analyst are you? What type of a investor are you in the market? Are you a investor, which means you wait for positions to trade, or are you someone that has to be on the chart every single day for you to trade the market? And once you have made up that idea of who you are, and once you have created, you know, who you are, then you are going to easily make money in the market. All right. Now, a day trader is going to lose money in seasons like this because the market is unpredictable. All right, most of it is unpredictable when the market is consolidating, and then when the market is basically moving in one direction, then you would be making money. And when you are also, a swing trader, then you would be, taking time to, rest. Now, the main purpose for your trading is not so that you can make, you know trades every single day, is for you to have freedom. All right. But now, if you're having a losing streak, then you should take a break from trading and then, come back to the market when you see fit. All right. And be a profitable trader. That the purpose of trading is to have freedom to go where you want to go, to do what you want to do. And you should also mix it with the idea of not everything is going to work out, the way you want it to work out. But, you know, progress is eventually going to come your way as you are, going with trading and all that stuff. It takes time. you know um if you're making $1,000 per month, that's what you qualify for this season. As you grow, you make more money, and you should remove that pressure from you. you know yeah, so with that being said, if we can look at, DXY, we can see that DXY has been moving, sideways. All right, it has been selling, but the mannerism that is being used in this selling process shows us the price is going to go up. All right, price is going to go up because this is liquidity here. All right, there's a lot of liquidity at this region right here, and since there's liquidity, we are going to see price going up. So I can say that I'm expecting, price to come up to this area right there. And I can talk about, long-term ideas, probably seeing price coming here, but I need to see how price reacts to this supply right here. Yeah, so there's this liquidity right here. What are the scenarios of what we can see with price? We can see price, going all the way down from here, and then eventually going and then taking out that area and then dropping down. Or we can just see price basically, going all the way up to this area right here. And that is now the two things that we need to wait for. We need to see how price reacts to this supply that we see here. We will see an internal change of character on the supply area right here. So you can literally see that this is supply area and then there's liquidity above here. So we know that this is liquidity that is laying all the way down here. All right, so all of this is liquidity. We know that there's liquidity above here, and then we should also know that since this liquidity, can we see an internal change of character? So you can go down to your, your 30-minute time frame, and you can see basically the price did not take out this area yet properly. So so our swing low is basically low here, and it will take time for us to see that. So we're still in this range. Price is ranging, price is drastically ranging. So highest chance is for us to see price, basically taking out this high perfectly, so that we can see this as a low, and then we know that this is the low that we need to see a change of character on before we can move, to having an idea of what's going to happen inside of the market. So DXY is still bullish. So now that DXY is bullish, then we know that Euro USD is bearish, GBP USD is bearish, and yeah, where does the mindset change? Where do we change our whole ideology? Is when we basically see this low being taken out. We need to see this low being taken out, right? Or even if you're conservative, this one, but that's like it's too much. So we need to see this low taken out, but not with a wick, because sometimes price can just create a wick, and then just grab liquidity and go up. So as long as price is inside of this region right here, what makes sense is bullish movement, bullish. All right, so DXY is still bullish, and that's in your notes. You should make sure that you indicate that DXY is bullish. And when DXY is bullish, we are looking for bearish movements on Euro USD. So Euro USD, we still know that we are looking for bearish movement, and when the market is in a consolidative state like this, it makes it very difficult for us to trade. Mostly people like me that are, I expect 1 to 6, 1 to 5, 1 to 4 risk reward, and that means that these are the times that we basically just chill. We don't trade the market, we don't do much, we will just be relaxing, waiting for price to move. Or this is the opportunity that you can basically use to back test, back testing instruments, looking at new instruments, like the JPY pairs, and all the other exotic pairs. But trading it safely makes it easier now for us to trade the market effectively. So that's my idea on DXY and the other pairs that are counterpart to DXY. Very important that you understand that when you are in this phase of the market, make sure that you are trading with low risk, because when the real market starts moving, then you would want to take part. But now, because of exhaustion in the market, because you've been depleting your account, you've been taking unnecessary trades, taking unnecessary positions in the market, when the real market starts moving, then you have nothing to play with. Very important. The only accounts you should be trading are the accounts that you're basically scalping with money that you can easily lose, meaning using low risk. And that's why it's very important that when you're making money, to stack up savings, make sure that you have savings, so that when you are in perilous times like these ones, that you can survive. Always when you're in a good streak, make sure that you have something in your cushion, make sure that you have savings. This helps you to trade the market profitably with a relieved mind, with a open mind, and you can easily be profitable when trading the market. Yeah, so that's what we're focusing on Continental Capital Institute. We don't only want to talk about signals and all that stuff. We don't give signals, we develop traders to become advanced traders and advanced market analysts. So I'll be giving you other ideas of what I'm also looking at in different markets, and with time, all right, with time I'll be giving you phases of what I think is going to happen in the market. And for the private mentorship, basically I will always be making sure that we drop down, in the CCI execution lab, we'll be dropping down, and also in the core students group we'll be dropping more detailed information as the market is progressing and moving forward. With that being said, guys, have a blessed day.